what I'm talking about. The SpaceX IPO. Now, a lot of people are going to sit around and wait for that listing day to arrive, and then they're going to scramble to buy in at whatever inflated price the market opens at. But that's not what smart investors do. Smart investors position themselves early. They get in before the crowd shows up, before the headlines go crazy, and before the prices reflect what everyone already knows is coming. And that is exactly what we're going to talk about today. 3 publicly traded stocks that I believe are sitting in a very interesting position right now, right before one of the most talked about IPOs in modern financial history changes the entire landscape of the space sector. So, if you've got a few minutes and you care about where your money is going, stay with me because this one is going to be worth your time. Before we go any further, if you're new here and you found this video through a search or a recommendation, do yourself a favor and hit that subscribe button right now. Here at Finance Hype, we break down opportunities like this one in plain language, no jargon, no fluff, just real analysis that helps you make more informed decisions. And we do this regularly. So, if you want to stay ahead of the market instead of always catching up to it, subscribing takes 2 seconds and it's completely free. Hit that button and let's get into it. Now, let me give you a little context before we talk specific names. When a massive company in any sector goes public, it doesn't just create a single investment opportunity. It creates a gravitational pull. It draws attention, capital, and media coverage toward every company operating in the same space. We've seen this play out time and time again across different industries. When a dominant player gets a public listing, the smaller already public companies in that same industry often get repriced. Investors suddenly start asking, wait, if that company is worth that much, what does that mean for these other names? That repricing process can happen quickly, and if you're not already in position when it begins, you're likely entering at a much less favorable price. That's the simple logic behind today's picks. This is not about chasing hype. This is about understanding how markets move and using that understanding to your advantage. And just so we're clear before anyone asks in the comments, this video is for educational and informational purposes only. Nothing here is financial advice. Every single investment carries risk, and you should always do your own research and speak with a qualified financial professional before putting your money into anything. With that clearly stated, let's walk through the 3 stocks. The first one is Rocket Lab, and the ticker symbol is RKLB. If you've been following this channel or keeping up with the space sector at all, this name is not new to you. But what might surprise you is just how much ground this stock has already covered. We're talking about gains that have been extraordinary over the past year. And yet when you look at what's happening with the sector as a whole right now, the argument could be made that there's still meaningful upside ahead, particularly with the SpaceX IPO about to shine a very bright spotlight on everything space-related. Now, here's where I want to slow down for a moment because knowing that a stock is interesting is only the very first step. The mistake most people make, and I've seen it happen over and over again with friends, with viewers, with people in investing communities, is that they hear about a hot stock, they get excited, they buy in without any real plan, and then they have absolutely no idea what to do when the price starts moving. Either they panic, sell too early, and miss the real gains, or they hold way too long, watch. And even domestic population still lacks reliable connectivity. Currently trading around $84, this is a stock that I think has a compelling setup going into the broader space sector moment that the SpaceX IPO is about to create. Using the same approach we applied to Rocket Lab, let's think about where this stock could go and where you'd want to enter. On the upside, the first level worth watching as a profit-taking target is around $115. The next meaningful level above that sits around $133, and if the stock develops real momentum, there's a higher target in the range of $186. If the price were to actually reach that upper target from where it's trading today, you're looking at very significant percentage gains. That's the kind of return that genuinely changes portfolios. But the key word there is if. Nothing is guaranteed, and that's why having entry discipline matters just as much as target discipline. On the entry side, if the stock pulls back from current levels, the first area worth watching for a potential buy or a position add is around $74 to $75. If the pullback goes deeper, the next support region is somewhere around $60 to $61. Getting in at those levels rather than chasing the stock at the top of a run dramatically improves the math on your trade. And when the math improves, your stress level goes down, too, because you're not sitting on a position that's immediately underwater the moment you enter. I want to take a second here to say something that I think is really important because I get a lot of questions about strategy. Some people in the finance world are pure fundamental investors. They read earnings reports, study balance sheets, and build long-term theses around company value. Others are purely news-driven, reacting to announcements and macro developments. And there are investors who focus almost entirely on charts, patterns, and price levels. The approach I use leans heavily on technical analysis because I find it gives me consistent, repeatable frameworks for making decisions without letting emotions drive the process. There's no single right answer to how you should invest, but there is one wrong answer, and that's investing without any framework at all. Having a process, whatever that process looks like, is what separates investors who build wealth over time from those who spin their wheels chasing returns. If you're still figuring out your own strategy, and you want to understand some of the approaches that have consistently delivered strong results, I've put together a free resource that walks through the methodology I found most effective, including real examples and historical performance. The link to that is in the description if you want to check it out. No pressure at all. Now, let's get to the third stock because I've saved one of the more interesting. The price run up to a beautiful profit, and then sit there frozen as it slowly gives all of that back. That emotional cycle destroys more wealth than bad stock picks do. So, before anything else, you need a plan. That plan has 4 parts. The first part is finding a high potential stock that fits your thesis. We've done that. Greater than gasps, greater than Rocket Lab fits the thesis here given the SpaceX IPO narrative and the company's actual fundamentals in the launch and space systems business. The second part of the plan is defining where you will take profits before you ever put a single dollar in. This is non-negotiable. When you're sitting on a 40 or 50% gain, your brain will tell you to hold because it feels like the stock has nowhere to go but up. That feeling has cost investors billions of dollars collectively. You want to be looking at price levels around $96 to $97 as a first profit-taking zone, and then above that, somewhere in the range of $133 as a secondary target. These are areas based on technical analysis where momentum has a higher probability of slowing or reversing. You don't have to sell everything at once. Many investors prefer to scale out, meaning they take partial profits at each level, which lets them lock in some gains while still participating if the stock continues to move higher. The third part of the plan is your entry strategy. And this might be the most important part of all because the price you pay determines your entire risk-reward profile. Randomly buying in because you heard about a stock and you're excited is how people end up buying at the top. Instead, you want to be patient and wait for pullbacks to key support levels. For Rocket Lab, the first meaningful support area to watch is around $79 to $80. If the price pulls back further, the next level to consider is somewhere around $67, and below that, there's another potential area around $57. The idea here is to get in at a level where there's historical evidence that buyers have stepped in before, which gives you a much better average entry price and improves your risk-reward significantly. Now, if you're worried about missing those entry points because you can't stare at charts all day, and honestly, who can? I've set up a free alert service that will notify you when the price hits one of these key levels. The link to join is in the description below. It's completely free and it takes about 30 seconds to set up. The fourth part of the plan is diversification. And I know some of you are going to roll your eyes at this because it sounds like a basic concept, but I promise you, it matters more than almost anything else. No matter how confident you feel about any single stock, no matter how strong the thesis looks, the market does not owe you a profitable outcome. Unexpected, clears throat, news, macro shifts, sector rotation, company-specific surprises, any of these can turn a strong-looking setup into a painful loss. Spreading your exposure across multiple positions means that when one idea doesn't work out, it doesn't blow up your entire portfolio. And that's exactly why we're not stopping at just one stock today. By the way, if you're finding this breakdown useful, drop a like on the video right now. It genuinely helps more people find this content, and it tells me that you want more analysis like this. I appreciate every single one of you who takes 2 seconds to do that. It makes a real difference. Moving on to the second stock, and this one is a little different in terms of profile. We're talking about Space Mobile, ticker symbol ASTS. If you haven't heard of this company yet, the core idea is connecting people to broadband internet directly through satellites, no terrestrial infrastructure required. That's a massive addressable. Setups for last. The third name on today's list is Redwire Corporation, ticker symbol RDW. This one is a little lower in terms of current price, trading around $10, which actually makes it accessible to a wider range of investors, including those who are earlier in their investing journey and working with a smaller starting capital. Don't let the low price fool you, though. Percentage gains are percentage gains regardless of the starting price, and the setup here is genuinely interesting when you look at the technical picture. Redwire is focused on space infrastructure, manufacturing components and systems that go into satellites and space missions. As the space economy grows, demand for that kind of foundational capability grows with it. And again, when a $2 trillion company goes public in the same sector, everything in that sector gets looked at with fresh eyes. Looking at potential targets for Redwire, the first meaningful level to watch on the upside is around $15. That's already a 50% move from current prices, which is nothing to take lightly. Above that, there's a target around $17.10. And if the stock really develops serious momentum, the upper target to be aware of is around $23 to $24. Now, I want to be very clear. These are potential targets based on technical analysis, not guarantees. This is a smaller company with its own risk profile, and you should factor that into how much of your portfolio you're comfortable allocating here. For entries, the first support level to consider is right around $9.70. If the stock dips below that, the next level is around $8.50. And if the pullback extends further, there's a third area around $6.90 that historically has shown buying interest. Same strategy as before, you're looking to build a position gradually across those levels rather than committing everything at once. Dollar cost averaging into a position on the way down is one of the most practical and emotionally manageable ways to build a trade, especially in a volatile sector like space. It removes the pressure of having to be exactly right about timing, which honestly no one ever is consistently. Now, here's something I want you to really sit with for a moment. We are potentially weeks away from what could be the largest IPO in Wall Street history. If SpaceX hits the valuation targets that have been discussed publicly, we're talking about a listing that would dwarf every other public offering that has ever happened in the history of the markets. When that happens, retail and institutional investors alike are going to flood into the space sector with a level of enthusiasm we haven't seen since the early days of commercial space. The names that are already public, already have established businesses, and already have some narrative momentum going into that event are the ones most likely to benefit from that inflow of capital and attention. Rocket Lab, Ast Space Mobile, and Redwire are three very different companies at different stages of development with different risk profiles and different reward potentials. But all three share that common thread. They are public, they are in the space sector, and they are sitting in front of what could be an enormous macro tailwind. Whether you're looking at this from a short-term trading perspective or a longer-term positioning perspective, having at least some awareness of these names right now seems like a reasonable thing for any informed investor to do. And look, this is not about getting rich overnight. Anyone who tells you they have a guaranteed path to quick wealth in the markets is lying to you. What this is about is identifying opportunities that have a logical thesis, managing your risk intelligently, having entry and exit plans, diversifying exposure, and staying disciplined when emotions are trying to make your decisions for you. That's it. That's the whole game. And while it sounds simple when I say it that way, the execution is where most people fall apart. The emotional side of investing is harder than the analytical side for almost everyone, and acknowledging that is actually the first step to getting better at it. I'll be putting out follow-up videos on all three of these stocks as the prices approach the key levels we talked about today. If you want to be notified when those updates go live, the best thing you can do is subscribe to Finance Hype and turn on notifications. That way, you won't be sitting there trying to remember to come back and check. The content will find you. And if you have questions, thoughts, or if there's another stock you'd like me to break down in the context of the SpaceX IPO, drop it in the comments below. I read through the comments regularly, and your questions genuinely help shape the content we put out. So, don't be shy. Let me know what you're thinking. Also, if this video gave you something valuable, share it with someone you know who's also paying attention to the markets. Your friend who's been asking about the space sector, your coworker who's been curious about where to put their money right now, your family member who keeps watching the headlines and wondering if they're missing something. Sharing this kind of content is how we grow this community, and honestly, it might just help someone you care about make a smarter financial decision. That's worth a lot more than a like, though the likes are always appreciated, too. And I do mean that sincerely. I want to leave you with one final thought. The investors who build real, lasting wealth over their lifetimes are not the ones who are always right. They're the ones who have a consistent process, manage their downside carefully, and stay patient enough to let their thesis play out. The SpaceX IPO is a moment. Moments pass, but the habits and disciplines you build around investing will serve you for decades. Use this opportunity not just to potentially make a good trade, but to reinforce the kind of investor behavior that compounds over time. Because that is ultimately what Stock Mo Hype is here to help you do. Thanks for watching this one all the way through. I'll see you in the next video.